Hello, just wanted to spend a few minutes with you talking about the election. And there's a lot of speculation going on right now, the first week or two after the election, about what's going to happen to the economy and the ramifications. And the broader financial markets are made up of literally billions of people just like you and me. And we all would rather have certainty than uncertainty. And one of those uncertainties was removed because we now know who is going to be president for the next 4 years. But there's still a lot of uncertainty in the marketplace. Tax rates, entitlement reform, sequestration, just all kinds of different things going on out there. So there is kind of a silver lining, though, and that is just as concerned as there's a lot of people very concerned about where the market's going. That tends to keep pressure on prices of equities, of stocks. And if any of those uncertainties get resolved, we have the potential to actually increase future earnings. And that's kind of contrary than what you might think. But if you look at the recent past, we can certainly see that. Because the opposite side is that when things are really happy days are here again, people tend to bid up prices, and that actually damages future returns. Let me go into some more detail. If by chance you happen to buy real estate in Florida in 2006, in 2006 it was real estate never goes down in value. That was the thinking then. It always goes up. You always have real estate. So people were buying it like crazy. There's a lot of easy money to be had from banks and lenders. But if you've held it till now, you likely have not had the return that you would have gotten invested for the reasons that you invested it. You haven't had the return that you thought you might. Likewise, if you had invested or held stocks in March of 2009, March of 2009, as you may recall, was at the very lowest ebb of the stock market in the crunch that we had, the Great Recession. But if you held your stocks then, which you've experienced if you had a globally diversified portfolio, is a 100% increase in value. And that's because a lot of the uncertainties that were in existence in March of 2009 got resolved over time. And so your natural inclination to buy when real estate was really high or sell in the market when it was really low could have been exactly opposite of what you should do. So it is important to be aware of the events going on in the world. It's prudent to do so and not stick your head in the sand. But it's at least as important to consider those in light of your overall financial plan, so that the decisions that you make can continue to contribute to the financial future that you desire for yourself and your family, and that you don't lose track of the context in which those decisions should be made. And we are happy to help our clients in that decision-making process, and look forward to doing that as the year winds out and 2013 takes off and we see the resolution of some of the challenges and uncertainties we now face.